there's not much physical silver left in London. And of course, you can always get the silver, but it depends on the price. And there's also backwardation. The spot price is still higher than the December price. So, yeah, and I've been hearing from good sources that central banks are buying billions of dollars worth of physical silver, even directly from the mines, the miners, which tells me that uh, they can't find it anywhere else. So they are going straight to the source.
So plenty of these people will have the money and they'll say, right, that's it. I'm going to go and put it in the stock market, or I'm going to buy gold, or I'm going to buy silver, or I'm going to buy Bitcoin, or I'll do my home extension. So not all of it will necessarily stimulate the economy, but it will have the effect for sure of pushing up asset prices. That's definite.
Physical silver conditions continue tightening as global exchanges show signs of strain, with dwindling London inventories, persistent backwardation, and sovereign buyers increasingly bypassing traditional markets to source metal directly from miners. This shift signals not only scarcity, but a growing recognition that paper-based supply cannot meet real-world demand. As liquidity moves toward tangible assets and key commodities outperform broader equities, the pressure on precious metals is accelerating, supported by long-term structural deficits and unprecedented interest from both private capital and central authorities. Clive Thompson, a respected macro analyst, and Mario Innecco, a veteran precious metals commentator, emphasize that silver's relative undervaluation remains one of the most striking distortions in global markets. Their assessment highlights how silver's ratio against equities, gold, and historical benchmarks continues to signal massive upside potential, strengthened further by growing institutional interest. With miners accounting for only a fraction of major tech sector valuations, even a marginal rotation out of inflated equity positions can drive powerful moves across the metals space. Now, we present the clips from their interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
Physical silver demand is very strong, and I'm still hearing, Clive, that central banks are now buying silver, a lot of silver, and to me, that's a game changer because up until recently, people said that the gold-silver ratio was this high because silver is only an industrial commodity and that central banks only buy gold. But I think things are changing.
So, Mario, if silver gets to the sort of rather middle of the range area, let's say 50 to 1, what's the price of silver?
50 to 1, that would be about 80 if gold doesn't change, right?
And I think it will. I mean, obviously, the historical number was more like 20 to 1 or even
Or
15 to 1.
was, yeah, historical is like even 12. I think in Roman times it's 12 to 1. Yeah, 12 to, and then, since the Middle Ages, I think it was 15 to 16 to 1. And one chart I wanted to show, Clive, is the S&P versus sorry, silver versus the S&P ratio. And I've got it as far back as the early 1900s. And you can see that it's in a falling wedge formation. I know it's a 100-year falling wedge, but we can see how undervalued silver still is up until, I mean, up until 1991. The gold silver, silver had never traded below this level here, 0.013 versus the S&P. And we're still below that level. I mean, there's a lot of potential. I calculated if we go back to the old high on, not on a closing basis, this is a closing basis chart, but if we go, I think the high on intraday is like 40 something, 45.45. It would mean silver going up almost 60 times in relationship to the S&P. And I think we're breaking out here, Clive. I know gold and silver have kind of been consolidated since mid-October, but they needed a break, some kind of pause. But it still looks really good. So I think we need to keep an eye on this chart. And it could, I think I have a feeling it's going to take a lot less time for it to spike. than how much time it's taken overall, this falling wedge. So I think this is something important to keep an eye on.
I'm just looking, I can't show you, but I'm looking for a chart of what the value of the silver market is
Yeah,
versus the stock market. I know I had that on my screen a bit earlier today. I'll tell you when I find it.
yeah. And the other thing I was looking at, which is interesting, that year to date, silver is up 73%, gold is up 55, and Bitcoin at 86,000 is down about 7%. So Jay Powell said recently that Bitcoin is just digital gold, but that's not true. If Bitcoin is digital gold, it would be up 55%, and it's not this year.
What we're looking at here is the total size of the S&P 500. Now, this is a logarithmic scale. I want to stress it's logarithmic. So the lines are not, the bars are not in scale in percentage because it's on a log scale. But you see the S&P 500 is 55 trillion.
Yeah,
The silver market is 2 trillion
yeah,
ish, to call it 3 trillion if you want. So only a tiny amount of stocks deciding to reallocate to precious metals, silver in particular, would have a very dramatic effect on the silver price. And of course, when you look down at the gold mining sector, which is less than 1 trillion, less than a quarter of less than one fifth of the value of Nvidia, and the silver mining sector at 54 billion, a tiny, which is really a tiny, tiny fraction of any of the tech stocks. So there's a lot of, what I'm trying to say is here, if the wind goes out of the sails of the AI sector, which is driven by the four largest companies in America, probably, and people start to look for other things, you don't need a lot of those other things to head in the direction of precious metals, and precious metals will fly. Year after year, the government, no matter, even if the money supply isn't increasing at certain times, the government's debt continues to increase. The government continues to get poorer. And as it gets poorer, it's spending the money that is borrowed, and someone's getting that money. And that money, whether they reinvest in treasury bills or not, the persons who get it are getting richer, and they're looking to say how many more treasury bills can I buy, and so they're starting to look elsewhere. And that's why I think other assets are flying at the moment, because there's more and more people realizing that the writing's on the wall for government debt. They can't continue to increase at this kind of pace forever, because sooner or later we get into a debt spiral.
there's not much physical silver left in London. And of course, you can always get the silver, but it depends on the price. And there's also backwardation. The spot price is still higher than the December price. So, yeah, and I've been hearing from good sources that central banks are buying billions of dollars worth of physical silver, even directly from the mines, the miners, which tells me that uh, they can't find it anywhere else. So they are going straight to the source.
There's been quite a shortage of platinum in the marketplace this year. I think it's about 16%, which is one of the reasons why the platinum price has gone up by 60 odd percent this year. That, according to the estimates I've seen, that deficit should come more into balance next year. But the long-term prospects for platinum are once again one of deficit, and of course, the platinum market is absolutely tiny compared with the gold or silver market. And as Francis pointed out, platinum is more of a byproduct of other mining. So there's not a lot you can do to increase the platinum amount. You can't just go and open up a platinum mine. I mean, apart from that, it's impossible to find. But even if you did, it wouldn't be economic unless you're mining something else. And most of the platinum in the world comes from Russia and mostly from South Africa, but Russia and South Africa are the two key places. So potentially some instability from those places in terms of the supply. And if we get into a situation where the supply doesn't get out because of civil strife or something, if you want to get involved in precious metals, it's not a bad thing to have some exposure to platinum as a sideline to gold, because if it decides to move, it's going to move a lot faster and further than silver or gold. Having said that, I think it's had its run for the time being, so I'm kind of expecting a year or so of stability. But I do think long term the prospects are for the platinum price to exceed the gold price, just as was the case for, well, since the beginning of time and up until a decade or two ago. So yes, by all means hold platinum, but it's not kind of you know, gold is the ultimate safe asset. Platinum is more of a an asset you want to buy and change it to gold at some point when the price has gone up.
Yeah, I agree. I mean, gold is a monetary metal. Platinum, not as much. But I agree with France's view as well, and your view that there's not that much out there. And geopolitically, even though I think on Friday it looked like there's going to be a deal between Ukraine and Russia, brokered by President Trump, it looks like the Europeans are trying to scupper that. So things are still uncertain. As for the $2,000 check that Trump is talking about, they want to bring that in the next few months. And I think this shows that the economy is not doing great, as Trump says. Because why would people need a stimulus check if the economy was doing so great? And it just goes to show that he's losing a lot of support from the bottom 50%, the people who are struggling with actually inflation, because he called it an affordability crisis. But that's just another politician trying to hide the fact that all they do is really create inflation.
Physical silver conditions continue tightening as inventories in London fall to critically low levels, while backwardation persists and spot prices remain above near-dated futures. Sovereign buyers are increasingly sourcing metal directly from miners because traditional channels cannot supply sufficient quantities. Strong physical demand is now paired with broader asset rotation, as incoming stimulus and rising liquidity push individuals toward tangible assets rather than consumption. Gold accumulation among central banks is accelerating, with many countries still holding far below Western levels and needing to buy thousands of tons to match those benchmarks. This structural imbalance supports a prolonged upward trend in both metals. Even modest reallocation from equities into hard assets would have an outsized impact, given how small the precious metals markets are relative to financial markets. These dynamics continue to build pressure beneath the surface and signal a much larger repricing ahead. Let's get back to the interview.
I guess they're not going to go to everybody. They're going to be income limited. So if you have a salary of, I don't know what it'll be, 100,000, 200,000, they'll say no stimulus check. But obviously, it does what it's supposed to do. It stimulates the economy. It gets people out and spending the money. Uh, Many of them won't spend the money. They'll invest the money, and because just because you earn below whatever the limit will be, doesn't mean to say that you actually need the money. So plenty of these people will have the money and they'll say, right, that's it. I'm going to go and put it in the stock market, or I'm going to buy gold, or I'm going to buy silver, or I'm going to buy Bitcoin, or I'll do my home extension. So not all of it will necessarily stimulate the economy, but it will have the effect for sure of pushing up asset prices. That's definite. And this is how they keep the economy alive by provided house prices are going up, provided stock markets going up, everybody's a happy bunny because everybody feels richer and they keep spending.
Clive, wanted to turn to gold here because I sent you something about gold holdings, and then you sent me back this. This is from the World Gold Council, and uh, and you've highlighted here, like China, for example, officially only has 7.7% of their uh, official reserves in gold. Japan 7.8, Saudi Arabia 8, Singapore 6.1, Brazil 5, Mexico 5.7, Korea 3.1, and Korea's been buying again. And United Arab Emirates, I've heard that they're buying as well, and so Saudi Arabia. And if you look at the US, Germany, and the other European countries, their gold holdings are a lot bigger as a proportion of reserves. So you're trying to tell me, I guess, that there's going to be a lot more gold buying if these countries
Well,
want to match the West?
First of all, I live in Switzerland, so it worries me. Although Switzerland has a lot of gold, it does worry me that they've only got 12% of their reserves in gold. The rest
Yeah.
seems to be in MicroStrategy and Apple and stocks like that, which are obviously rather, in my opinion, rather expensive assets, and far rather they held their reserves in gold. But be that as it may, what I'm trying to say here is that many of these central banks, or some of the central banks, have got large percentages of the gold of their assets in gold, and when you look around it, China in particular have got almost nothing. China's got 7%. Now, that's ignoring the secret gold that they might hold.
Yeah.
But what I'm trying to say is there must be a movement around the world to say, why shouldn't we have the same amount of exposure to gold as the United States and Germany and a few other European countries who seem to have got it right? Italy, a country which is almost bankrupt, has got 70%, 77% of its reserves in gold.
Yeah, even Portugal is like
France is bankrupt and
80,
has got
80.2.
France is bankrupt. They got 77% of their reserves of gold. Is that because they spent everything else apart from their gold? I don't know. But my point is this: don't you think that the rest of the world should try to get up to these standards of having 70 or 80% of their reserves in gold? And if they did, where's it going to come from? Because the annual production of gold is only about 3,000 tons. And if you look at the number of tons which would need to be bought to get up to the standards of, say, Germany, there's a long way to go,
Yeah, no, and that's why I
and
think
that gold isn't there.
yeah, that's why I think the price of gold is going to keep going up, and these people are going to keep buying. They've been buying about 1,000 tons every year since 2022, and it's going to continue. Clive highlighted China with only 7.7, and Japan 7.8, Saudi Arabia 8, and I've been hearing that Saudi Arabia is buying gold again. And also Brazil, they started buying as well again, and also Korea, they even announced that they're going to start buying again. They've only got 3.1%. I mean, they should have more, like 30%. And that would mean 10 times more. That would be just a thousand tons just for Korea. So
Well, Mario, all these countries should have 100% if they got their brains in gear.
yeah, 100%. I mean, I think the Fed used to have a 80% gold cover. So, I mean,
Yeah,
not
that was enough.
this is from Dr. Simon Godek. He's a most canceled scientist, libertarian, polyglot. So he's got this chart here, composition of the atmosphere. So we've got yellow is nitrogen, blue is oxygen, red is argon, and CO2. The total is 0.04. That's the green. The natural is 0.384, and the human produced CO2 is 0.016, which is this little white square. So it says the green. So this just goes to show how this climate change thing that it's just a scam. I mean, they just finished this 2 week, I think, COP 30 in Brazil. I mean, the amount of carbon they've emitted into the atmosphere, even though I don't believe it's a problem, but for them it would be, is humongous. And I mean, you can barely see it. It's almost like the market cap of silver in relationship to the whole market cap of financial assets. So I'll let Clive chime in on this one, and then Francis.
Well, I'm no scientist, but a few years ago, I started measuring the temperature in my village. And the reason I started doing that was because it just seemed to me it was getting hotter and hotter. When I analyzed it, it was literally the hottest in many, many decades. But I can tell you now, and since a couple of years, it's been absolutely freezing. So it's swinging both ways. I would say we're nowhere near peak temperatures anymore. So I don't know what's changed.
Yeah,
Uh, it,
they
it,
used to call it global warming, Clive, but now
oh yeah, yeah, I
that's
remember
gone
that
out. So
word.
now they
Yeah,
call
no,
it climate change.
Yeah, we had something called ESG, didn't we? Like you went to a bank, they told you how wonderful they were for preserving the planet. And then
Yeah.
now none of them want to talk about it anymore because the
No.
ESG investments all gone down.
The ongoing surge in precious metals demand highlights a structural shift that is no longer hidden beneath the surface. Physical silver shortages, backwardation signals, and central banks purchasing directly from miners reveal a market where real supply is being pursued aggressively while traditional inventories drain. At the same time, gold buying continues to intensify as nations move to rebalance their reserves and reduce reliance on weakening sovereign debt. These forces point toward a broader repricing cycle, one fueled not by speculation, but by global strategic accumulation and long-term monetary realignment. As liquidity programs expand and asset rotation accelerates, the metals sector is well positioned for sustained strength, supported by both macro pressures and tightening supply. This trend is unfolding in real time, and the implications for investors and global markets are becoming increasingly difficult to ignore. Share your thoughts on their analysis in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.